Hi, all. Welcome to Cryptonite. I'm Sham, and I have Dr. Tejasvi with me. Hi, Tejasvi.
Hello, Sham, and hello, everybody else.
So, Dr. Tejasvi is sort of my childhood buddy, and he's been deep into crypto for the better part of this decade, I think.
Okay, yes.
And he's been both on the tech side of things. He's got a PhD in in crypto, in the crypto side of things. And he worked for a VC firm that was financing a lot of crypto projects, and he's got a bombshell news for us. So, Dr. Tejasvi, take it away.
Hey, Sham, thanks for that, and thanks for that very dramatic intro. It's not as dramatic as it sounds. Uh, Generally, what happened was over the last maybe 3 months, since I would say Trump has been elected, I have been thinking about it in a more fundamental sense as to the value that crypto adds to the world, and also generally whether a lot of it is kind of worth doing. Uh, I guess the Trump meme coin was kind of a trigger, which happened, I would say, on January 20th or 19th, if I'm precise. So the Trump meme coin kind of showed that the US regulators for a long time had kind of kept crypto under check by arbitrarily suing some people, arbitrarily enforcing some guidelines, but not really going kind of all bad on it or all kind of allowing it fully, right? So they had this kind of very vague approach on regulation. And then that kind of became open and friendly suddenly. And all the crypto, I would call I would call them actors with shallow morals or loose morals kind of became very aggressive and started peddling meme coins, coins which have no utilities, generally being more kind of crypto for the world, generally saying that how do we decentralize our bags, as they call it. What that means is typically when you decentralize something in crypto, it's basically you're decentralizing the network, saying that more people run the system, so it's more resilient. Decentralizing your bags means that you have a lot of tokens that you have minted out of thin air, and you want to decentralize the holdings of all the tokens to other retail investors, so they give you real money. So basically, decentralizing the bags kind of was a meme in our niche industry, and that got to me eventually. Eventually, I decided that okay, I'm done with at least the non-Bitcoin part of crypto, which is probably all of crypto, to be honest, because Bitcoin and its related industries are very small. So there is some work on Bitcoin custody, which is I think very relevant, and there is work on Bitcoin, the project itself, in terms of improving its networking, improving its wallet securities and stuff like that, but nothing really about the protocol. There are some research going on. There is some research going on about improving Bitcoin by changing Bitcoin mildly, but that is a much harder problem, and it's going to be taking a longer time. So if you're leaving Bitcoin aside, the rest of crypto, which includes what are called Bitcoin layer twos and Ethereum, Solana, Cardano, XRP, Monad, the whole bunch of networks and tokens from there onwards, they all seemed a bit unappealing to me eventually. I like the technology for the most part. I kind of know the technology very well, but it kind of got boring and uninteresting. And eventually, we knew that Ethereum, which tried to straddle this line between decentralized and being useful as a computing platform, its value is going down for the last many years, which shows that decentralization doesn't really have a premium in terms of value appreciation beyond Bitcoin. So you might as well become Solana or Monad or some other network where you are a smart contract platform, which is basically Web 2, but decentralized for the most part or some part. And then you kind of accrue value because you are allowing some sort of these applications which are 24 bar 7, which are composable. You can kind of think of it as NASDAQ being able to call the API of Google stocks or whatever, right? Something like that. So this kind of composability and these things were kind of nice, but eventually that got boring as well. I was not interested in the financialization of stuff. Financialization of stuff means financialization of everything, of infrastructure, of real world assets, of money, of stocks, of securities, of whatever you can think of. And you financialize them, then you make it easy to buy them, sell them, trade them, issue derivatives on them. Basically, financialization of everything essentially. Crypto makes it easy. It's happened before in the traditional world where things got slowly financialized over time. Crypto accelerated a lot of that in its own niche, relearned a lot of the lessons, and some of the regulatory lessons that were learned in the traditional finance industry have not carried over. So crypto has been much more happy to make money out of clueless people. And that also got to me eventually. I'll give you one anecdote just to give you kind of set a stage here. When I was in the VC company that I was in before, I'm still there because I've resigned and I have a notice period to serve. But when I was there, we got a pitch from a company that was trying to tell us that when they get a wallet interacting with the protocol, they will verify whether that wallet is a bot or not, or whether it's a real user or a bot. Basically, identifying spammy activity on a blockchain essentially. Uh, their specific application was you have all these so-called airdrops. When I say airdrops, just to give you a background, some of these protocols eventually start when they start, they have no tokens, they have some application. What they do is they will eventually create a token, and the token will be given some to the team members, some to the investors, and they cannot sell that token to the public for money. That would be called an ICO, which are they're mostly illegal in the US for a long time. So what they would do was they would drop the tokens free to a bunch of people who are using the protocol. So you basically think of it as Uber giving Uber shares to their drivers, right? So basically, they are coming up with tokens, and tokens are being given to the users of the protocol. These are called airdrops, and airdrops created an industry called airdrop farming, where there are a bunch of people who would farm these airdrops. So they're industrial farmers. What that means is they have a bunch of bots. They have a way of knowing how to operate on each protocol. They track launches, and then they kind of do the right thing to get the airdrops. Then they'll sell the airdrop immediately and kind of make money. So these guys who were trying to detect bots, they wanted to stop airdrop farming. And I thought that was a great idea. Why wouldn't protocols like that? They want real people to get the tokens and not some bots, right? So then I go to my investment committee and we talk about it. And three of my partners tell me that hey, they are trying to solve a problem that you should not be solving. And I'm like, what do you mean by that? Spam is bad. I mean, bots are bad. And they say, no. The idea is you have these airdrop farmers who will farm the tokens and they will sell it to retail, essentially. So you are basically, they are doing the investment banking equivalent of an IPO. And when this conversation happened at work, I was a bit uh, taken aback. I kind of realized the truth of it. Because ICOs were illegal, you could not sell directly to customers or users. You had to go through these kind of contrived airdrop farmers to reach retail token buyers. And that's when it hit me that I'm not suited for this world. I'm more interested in cryptography. I'm more interested in figuring out distributed systems. I'm more interested in libertarian thinking. I don't want to be funding investment bankers who act like airdrop farmers, and this whole thing was a bit too much. So that was kind of one of the anecdotes, and I have many such anecdotes where my insights into cryptography and Bitcoin were contrary to what is required to be a successful investor in the crypto space. And one could argue whether being a successful investor in the crypto space is a good thing. That judgment I will leave to other people. But the skills required for that were also a different level, which I would probably not want to develop. Even though I could develop it, I don't want to develop that. So that's kind of where it all started, and now I'm done with crypto in some sense.
Right. So, so do tell us about the other instances. I mean, obviously, you don't want to disclose specific projects, but do add some color there if you can.
Yeah, definitely. There are many instances like this. So one could, for example, look at Ripple as a currency, right? So Ripple is entirely centralized in the sense that the Ripple Foundation or the Ripple organization controls 55% of the tokens, out of which they used to control 90% before. And they've been releasing a few bunch every now and then. And people have bought it, and there is absolutely no application to it. And the SEC obviously sued them, saying that this is like a security, you're launching a security, you're not registering as a security. So there was the Ripple versus SEC law case, which everybody in the crypto industry was kind of happy about because they want Ripple to not be the face of the industry. At the same time, they want Ripple to win because they want SEC to lose. Because SEC, though, is a regulator trying to protect retail, they had this kind of haphazard approach of suing crypto companies. So they had done a lot of collateral damage. So the crypto industry participants wanted Ripple to win against SEC, despite not liking Ripple itself as a company or as a protocol, because it's completely useless protocol. It's of course completely useless in my opinion. Some people will argue it has uses, but I haven't seen any. They're supposed to be like a banking protocol or whatever. I don't know any bank that has implemented them. So The idea that when SEC dropped the Ripple case, which happened after Trump won the election, everybody in the crypto industry was happy. At the same time, bemoaning that, oh man, it's Ripple still, and Ripple is still doing so well, and Ripple is in the top 5 cryptocurrencies for no reason. So they're unhappy, but they're happy at the same time. This level of hypocrisy eventually kind of also got to me, where people are generally the industry participants, people I follow on Twitter, people I respect for other reasons, my own company as well, because everybody wants regulators to be easy on this. At the same time, the exact bad actors who are doing bad things, they don't want them to be sued because they are a part of the industry, so to speak. So it was a bit, the inconsistency also got to be quite a bit. So that was another example. Uh, there was one more anecdote which is also kind of funny, I think. So there is a blockchain called Starkware, which is fairly niche, but it has raised a lot of VC funding. And Starkware is trying to find the product market fit for the last, I would say, 4 years, and has been unable to do that. But because they raised a lot of money, they're able to sustain themselves for a long time. They have their token, which they airdropped to airdrop farmers, obviously, and then kind of went to a bunch of retail people. But nobody's using the protocol. So they're kind of trying to find out product market fit. So the founder, who is a very distinguished computer scientist in Tel Aviv, in Israel, who has a lot of computer science background before crypto, cryptography background as well. He wrote a post saying, what can Starkware do to get users or whatever, right? And somebody replied saying how there are no yield farming opportunities on Starkware. So what does it mean? What does it mean to have a yield farming opportunity, right? Yield farming basically means, let's say there is a token on Starkware and another token on Starkware, and there is a market maker, there's an automated market maker that trades the two in a pool, similar to what Uniswap is on Ethereum. Then somebody has to provide liquidity to these tokens, as in somebody has to buy those tokens and put them in the pool. And when you do that, that pool will give you some rewards of its own token. And that is the yield you get for the liquidity you have put in. Now, this yield is called yield farming. You're basically trying to get whatever you can do to get more yield out of the protocol. And apparently, Starkware did not have many yield farming opportunities. That's what this guy was complaining. And the computer scientist, who is the founder of Starkware, was like, of course, yeah, that's our mistake. You need to fix it. You need to add more yield farming. Obviously, we are like stupid people who are thinking of applications and usage and stuff. We should be targeting yield farmers. So, and then somebody kind of commented that this is the state of affairs in crypto. What a shame. And the yield farmer got upset about that comment, saying that, hey, I'm doing a job. Why are you like dissing on me? And that guy was like, no, you are doing your thing. Totally kudos to you because you're so transparent about yield farming. But I am just pissed about the fact that crypto is going this way. And that was me. I mean, I felt the same thing. I'm like this honest guy who's doing yield farming. His job is to yield farm, and that's what crypto is good for. So that got a bit sad. And eventually, at some level, the final nail in the coffin was the fact that technology at a high level doesn't matter. I think that is the kind of key thing I took away from this, because if you think about it, Ethereum has built a lot of aesthetically pleasing, clever, hard engineering artifacts. It really did try to solve the hard problem of decentralized compute in a way in which it is still decentralized. So maybe it will work. Maybe the experiment is still unresolved. But Ethereum, the token, did not get rewarded for that. Ethereum, the token, is in the gutter for the last many years. It actually went down the BTC value from 5 years ago, just now, a couple of weeks ago. And for the last 2 years, it's been very bad compared to BTC and even Solana and other currencies. And Ethereum's tech focus and the way of scaling through technological means is not going to work. They have to think like rent extractors. They have to be oriented towards short-term token holder value. Again, this is, if you think about it, it's very capitalistic in some sense. If you have an ideological outlook and you want to build something for the next 100 years, crypto markets don't reward you for that. Surprisingly, Bitcoin is the only thing which has somewhat held this this candle, so to speak, this torch, where it is built for the next 100, 200 years. There's no innovation. There's nothing happening. But somehow the value holds because people know that it's a hedge against even other bigger fuck-ups in the world, which are happening elsewhere. But once you cross that and come to crypto, you have the hedge already, which is Bitcoin. Going beyond that into the rest of crypto, where technology there is a lot of LARPing. LARPing, for those who don't know, is like live action role play. You basically pretend that technology matters. You pretend that all of these is important. Uh, I'll give you another example, which is very close to me, and it kind of bothered me a lot. So the last 5 months, there is this trend of AI agents, which are on blockchains. What that means is the AI agent is rewarded with a token on the blockchain. The AI agent coordinates with other agents using blockchain tokens. But of course, these are just the economics of the agent. The actual action of the agent happens on a Web2 world, where there are like large language models supporting the agents. There is, API calls to buying things, to booking tickets, to whatever you want to do, whatever you want to do as an agent. That agent API is separate, right? So there was a framework called ELIZA, ELIZA, which was an agent building framework. So what they did was they would let you plug in any LLM, ChatGPT, Claude, Google, Llama, DeepSeek, whatever you want to plug in, and they have all these plugins for interacting with blockchain protocols, interacting with Web2 ticket API, Stripe, or you want to buy something, you want to book a ticket, you want to do whatever you want. Very well thought out, very deeply integrated API, very rich toolkit to build an AI agent. So if you want to build an AI agent right now, you go to Elizad OS GitHub and you can build an agent in less than, like, say, 2 hours. Now, these guys, before they built this toolkit, they launched a token for it because that's what crypto projects do. And because they were a meme coin when they started, they launched all of their tokens to everybody. It was a full 100% airdrop. And now the guy who started the project wants to actually build this whole thing, and he needs real engineering resources. He has nothing to sell. He has no tokens to give out. He has no way to raise capital because the token is already out there 100%. So he then went on Twitter saying that I don't know how to develop this. I have developed this halfway thing now. I want to add more frameworks, more plugins. What do I do? So one of the whales of AI6, the ELIZA token, who controlled 20% of the supply, donated 15% of that supply back to the team, so that the team could then incentivize their developers to build the tools. Think of it this way, right? You have a IPO where the company IPOs 100% of the stocks into the world, with nothing for the team, nothing for the teammates, nothing for the employees, nothing for vendors, nothing for anybody. And now they're supposed to build a project because they have vested interest. They don't have any vested interest. The interests are divided already. So one of the receivers comes and says, no, you know what? If I hold 20% of a token that goes to zero, is not worth it. I would rather give you 15% of that, hold 5% myself, and hope you add value to the protocol. And that kind of also showed me that, crypto is the capital formation part of crypto, which I used to think was a real thing. The crypto would help do capital formation. It was not being done the right way. And I didn't see why crypto was required to do it the right way as well. I could see that you could just do it the right way, the traditional way, and that was good enough. So all the capital formation LARPing did not work for me either. But again, I have a coworker who I respect a lot. He definitely believes in capital formation as the primary use case of crypto, and I agree with him whenever some specific case comes up. But as a general policy, I don't see it. So yeah, these are some of the anecdotes. There are many more. I used to deal with them every day. I don't even want to go to the Melania meme coin and the sniping and the scamming president of Argentina launching a meme coin because he didn't even know what he was doing. That kind of level of scamming is outrageous. And yeah, I just couldn't deal with it anymore. I was done with that.
Right. I think a lot of state actors have also got into the mix, right? Because you have Trump, you have Melania, and you have Millet. I don't know what it was called, some freedom coin or something. And then you have this North Korean Lazarus that hacked some $1.6 billion out of Bybit and
Oh
pretty
yeah,
much laundered the whole
that
thing.
was no, that was a bit more sophisticated. So the Bybit hack, we can talk about that as a part of our crypto right. Back to scheduled programming, I guess. So as for the scheduled programming, we look at the Bybit hack, which was probably the biggest crypto hack ever. So what happened was, so Ethereum supports what are called multi-sigs, where multiple people have to sign and then the transaction will get executed. And for this to happen, you could either sign it, like you can have a kind of clever signature scheme where one signature is a sum of multiple signatures. Like that's a very advanced cryptographic scheme. But what Ethereum used to do was they would actually say, let's have a table And out of the table, we need 5 signatures. And if 5 of them are valid, we'll allow it. You don't need to do some fancy crypto math on adding them up and stuff. Crypto as in cryptographic math. So they had these on-chain signatures, which you would just, so they have 3 of us. I sign, my sign goes into the table. One more guy signs, so one more sign goes in the table. 3 of them sign, it's done. And this was orchestrated via Web2 UI called safe.global. It was like this URL hosted by a service run by a company called Safe. And Safe used to have on-chain smart contracts that would orchestrate these signatures. And one of the Safe developers' machine got compromised, and a malicious JavaScript was pushed to that safe.global Web2 application, which specifically targeted the Bybit wallet. There was code in the JavaScript that said, if wallet equals this address, then activate this malicious bit of code. So I have gone to safe.global in the same time, and that code was active for like 8 days. And of course, I didn't get fall for the hack because I was not targeted for the hack. Bybit, when they tried to move from their cold wallet to their hot wallet, which they do every time because they have a exchange, they have to serve a lot of customers. The 3 of them signed what they thought was the right to address, ended up being Lazarus Group. And Lazarus Group is a North Korean state-sponsored attacker. They were able to move those Ethereum that they stole into Bitcoin through another network called Thorchain, which some people have criticized now because Thorchain is a censorship-resistant bridge. And because it's censorship-resistant, it allows North Korean attackers to get away with it. But some of the good people were like, you guys have to censor this. They were like, you know what? It's censorship-resistant. That's what it is. So again, Thorchain is run by a bunch of validators, so they could have done something, but they didn't choose to. Then it went to Bitcoin. Once it goes to Bitcoin, what happens is you have all these small over-the-counter exchanges in Russia and China, where these sanctions or these kind of restrictions don't apply. So even if it's tainted, the Bitcoin will move. And Bitcoin has so much liquidity worldwide that it will move. Even if it's tainted, it's not a problem. So they were able to move from ETH to Bitcoin, and then Bitcoin was given to like some thousands of addresses, and now it's almost all laundered, and the North Korean government is richer by $1.6 billion. Maybe it's dropped in value a little bit for the last last couple of weeks. That's a different story.
Right. So, so what else, has kept you busy over the last couple of weeks on the crypto side of things?
Oh yeah, so crypto has been very. I mean, crypto is always. If you kind of forget about your longer term goals on what you want to be as a person and stuff, if you want to just enjoy the ride, it's a lot of fun. Crypto there's not a single boring day in crypto in some sense, right? So one weird thing is crypto markets have been tanking for the most part. Bitcoin even tested the 80,000 barrier, along with Nasdaq and a bunch of other risk on assets. So it's probably like a macro phenomenon. But the point was, at the same time, the regulatory environment in the US was becoming very, very attractive. So the SEC dropped a bunch of cases. They dropped the Ripple one, as I said before. They dropped the one on Coinbase. They dropped the one on Kraken. They dropped a bunch of other exchanges, other protocols. They tweaked a bunch of rules. They have like this new bill coming out. The US government announced a strategic Bitcoin reserve, which is basically they said that they will not sell all the Bitcoin they have confiscated, which is not the same as buying new ones. So basically, the US government, because of its law enforcement divisions, ends up confiscating a bunch of Bitcoin from bad actors, drug dealers, or whatever. Earlier, they used to sell them in regular amounts, but now the new executive order says they can't sell it. They have to hold it forever. They also announced a digital asset stockpile, which is slightly different. But anyway, so the general regulatory side in the US has been very bullish, but the markets have been very bearish. And that has kept a lot of us kind of wondering what happened. What was why were we doing so well when the government was against us? And when the government is now friendly, why is there nothing interesting happening? Of course, a lot of people are building interesting ideas and stuff. That's happening always, but nothing. No new crypto narrative has come up. No new idea has come up. So DeFi is still a thing. DeFi is going on. There was DEF AI. Obviously, you want AI with DeFi. That has kind of gone nowhere, I think, but it's still a maybe upcoming trend. There's DePIN, so digital or decentralized physical infrastructure. Like you have decentralized bandwidth, decentralized compute, decentralized satellite receivers, decentralized weather stations, decentralized traffic cameras, whatever you want to think of, right? Physical infra. Uh, that was a narrative for a while. That was kind of still going on, I guess, not petered out. So yeah, we keep seeing projects in various stages which have come through. There's also a whole bunch of, I would say, adult industry which is going on a blockchain now. What is interesting is typically porn and associated sectors used to be the first to adopt a new technology. It's kind of a known cliche from the internet 1.0 days. But in this case, it's apparently been a bit of a laggard. There was a bunch of crypto payments that happened back in the day. Crypto was used for payments in the porn industry, but the whole fledged embracing of the industry was not a thing. But now there is some with the AI narrative. People are thinking about AI twins, AI girlfriend experience. These things are kind of happening as well. So I saw a little bit of those deals. Uh, Not so fascinating, but it's there. Yeah. So overall, crypto is kind of fun. Nothing really stood out in terms of, oh my god, this is such an interesting thing that it's happening. And that was another reason why it's maybe I'm not seeing them because I don't want to see them anymore.
I think part of the problem is that if you look at the ARM Janta, right? So they went through this whole NFT craze where they saw photos of some rock trade at $1 million and all that stuff, and and obviously it just collapsed, and people are stuck with these forever tokens, like a permanent sort of evidence of their idiocy. And those guys, I don't know if they would ever come back and put money, into crypto. Like burnt so badly, especially if they were just on the margins, right? So they're just sitting on the fence. They saw other guys get rich trading monkey JPEGs, and they thought, hey, let me put some money into this and see what happens. And got burnt and forever swore off this. Like we see that in equity markets here often. Like people get into at the top of the small cap frenzy, they buy a bunch of shitcoins and it promptly halves or down 60%, and they're like, oh, this whole thing is a scam. I'm never investing in stocks again. I'm just going to do FDs for the rest of my life. So we see that happen here. So a similar thing played out there. And I think the second thing is, controlling supply. So all this law enforcement thing, put a kind of constraint around supply, right? So I read somewhere that there's one guy who launches some 20,000 meme coins from pump.fun every day. So
Yeah, yeah.
that's his job.
Yeah, so what happened was Pump.Fun was actually a very interesting experiment, I would say. So what Pump.Fun did was they would launch, they were the platform launchpad for meme coins. So you would go there, you would create a meme coin. All it needed was a name, a ticker, some final supply, whatever. And then you say how much you want to seed the initial uh, decentralized exchange to sell your tokens, right? So you have to be the market maker in the beginning in some sense. So they allowed you to launch everything and anything. There were people who were launching complete garbage, not even garbage by crypto standards, right? Even worse than that. All sorts of racist stuff, exploitative stuff, self harm. I mean, it got really ugly. Uh, and eventually, there was no limit to it, as you said. One could launch 20,000, 30,000, 80,000. There's really nothing stopping you from launching anything, right? I mean, it's like a piece of code. You control C, control V, and you write a script for it. It'll launch forever. So I mean, that's kind of at that level you appreciate eventually Bitcoin's innovation, which is there is a actual physical way to restrict supply, and it has to be done. Otherwise, there is no matter how much big money you create, that money will not be enough to hold the supply. You cannot say that I will create this much ETH and I'll put it in stake, and that stake will guard the rest of the money supply. It's still all kind of in the air in some sense. There's no like tie to the real ground. So I kind of the more you are in crypto, the more you appreciate Bitcoin's innovation in terms of actual controlling supply in a predictable way and that supply control working. Of course, people argue that Ethereum and Solana have kind of crossed the Rubicon, and it has gone to a place now where it is in a it is supply controlled in a way in which it is predictable, it is understandable. I disagree with that because Solana, for example, I think a month ago had a massive VC unlock. What that means is a bunch of venture capitalists who had put in money in Solana in 2020 or 2021, they all got unlocked and they could sell their tokens. And this information is not public. There is no place in the world where you can go and see how many Solana's tokens are getting unlocked tomorrow. You have to know people who know people who know people to get the information. There's really no unified place there. There's no disclosure regime, right? And if there's no disclosure regime, then what sort of a token is it? Is it like really supply constrained? Tomorrow, if something happens, somebody says, you know what, I was unlocked yesterday, but you guys didn't know about me. Sorry. Here is a new 1 billion tokens. Go have fun with it, right? Of course, you could also argue that Satoshi controls 1 million Bitcoin, and that could come into the market any day. But that's known. We know on chain that this guy controls it. It's there. So there's no unlock schedule there, right? I mean, you can sell it anytime. This Solana unlocks were all legally enforced contracts written on pen and paper behind closed doors. They were not on chain. They were not visible to everybody. So, yeah, I would argue that crypto's glut of supply is well known. NFTs showed it. Meme coins showed it. The plethora of coins otherwise show it as well. There is a bunch of infrastructure coins out there which are doing infra for infra sake. They are also there. Yeah, it's a problem, and I guess the sector is paying a price for it.
Right. And I think the on-chain transparency also has a lot to do with the fact that you know there is a premium to knowing what different players are doing at different points in time. So I've been playing around with this hyperliquid DEX, and they actually send you a streaming trade, right? So like a stream of trades, and each has a timestamp and the buyer and the seller addresses. So you can actually see which address sold and which address bought. And with this, you can go and circle back and see what that wallet holds, the net worth of that wallet. And you can deduce certain things from that, right? Which is not available in, in traditional finance. Like so if you're just a retail guy, you can be completely anonymous. Unless you're like start moving like 1% or 2% of the company, you're going to fly under the radar. But here, everything is so super transparent. So it puts a sort of premium on actually knowing what you're doing. So before you trade, there is a big sort of hurdle you need to cross in terms of educating yourself so that you don't get blown out of the water, on the first step. It's like Minesweeper. So
Yeah. No. This is actually one of the good things about crypto, right? One of the good things about crypto is there is so much more information about actual transactions everywhere. The blockchain data is very rich. If you know how to scrape it, play with it, model it, you have an edge over other people. Uh, a lot of people do it. A lot of people actually have knowledge about what's coming. So what's happened. But then there's a flip side to it, which is a lot of people know what is coming as well. So they have private order flow. And if you have private order flow, you can kind of jump ahead of that yourself. And that is a whole industry by itself. And that is kind of course, I guess TradFi also has an equivalent where, pay for order flow is not a unknown business. Anyway, I digress there. That's probably common between the two sectors. But what's not common is what you said, which is that every bit of financial transaction data is out there, and you can read it, study it, get alpha from it. It's all on you. Yeah, I think that part is the good part about crypto.
Right. I mean, I guess it's kind of ironic because, we set up a bunch of models to actually trade these tokens on Binance and, probably Hyperliquid. So we're kind of just doing this forward testing thing that we do. And it's fascinating that, ultimately we don't really care like what it stands for. But recently, I was just looking at what these things are picking up, and one of them was wrapped gold. So there's a token that tracks gold, right? The price of gold. And I was like, how is this even legal? like imagine trying to launch a gold ETF. It's you need to have some net worth. You need to have like some guy who will custody the gold bars for you. You need an investment banker. There's so many hoops to cross over in the real world. But on crypto, some idiot has already launched wrapped gold, and he's not the only one, by the way. So there are plenty of things. He's just one of the most liquid ones. And so it just got me thinking, like, there is no constraint on supply. There's only your imagination, right? So you imagine whatever you want, get a bunch of guys to trade with you, and you can have a successful token release. Hey.
Yeah. So the flip side to that is, if you are running a bot farm and you are watch trading with a bunch of your own accounts, how does a retail investor know?
Right. So that's why I'm saying, like, there is a premium to actually dig through historical records and find out what exactly is going on. So because if you actually plot a graph, you will know that it's the same supply circling within, like, say, a dozen wallets. So you absolutely need to do your homework before you jump into this thing. And it's not even homework about the feasibility of the project. It is homework about the nitty-gritty of where you're going to trade and what you're going to do then. And the worst part is, like, I don't know if other dexes have done this. It's Hyperliquid is allowing copy trading. So you attach your whatever they call it, something, and whatever you trade, and other people can map to you and map their wallets to you, and it'll trade your wallet. And my biggest problem with that is latency, right? So everybody knows the trades that are going to happen, and the guy who's going to get executed the last, right, is going to take it on the chin, because there'll be obviously guys with faster computes who can speed run the whole thing. So yeah, so there is like tremendous opportunities here just from a trading point of view, and not getting too hoots about what the actual project does or what it does. And as long as the price keeps going up, you keep playing.
And they will let you take a lot of leverage. It's even better.
Oh yeah. So leverage, that's the scary part, because no matter how you slice it, like, unless you're doing some really super secret niche arts, crypto drawdowns are like in the ballpark of around 30%. I've not done like a single strat where you can go long, you can go short, you can do whatever the hell you want to do, but you're going to see a drawdown of 30% somewhere. Like the long leg will tank, the short leg will blow up, something or the other will happen. So with 30% drawdown, if you take leverage on that, you're going to die. You're not going to be able to survive the drawdown. So yeah, so leverage is there, but I'm not so sure it's something that people should use. And even with
Yeah,
Bitcoin, right?
I think crypto already comes leveraged in some sense. You don't need leverage on top of it.
Exactly. And all these wrapping and they did some WBTC, which trades. I mean, to me, honestly, the fact that BTC trades on Hyperliquid in itself is a feat of engineering, right? It's a completely different blockchain, but they've managed to trade it there. And the big question mark for me is always like, okay, so you trade it in Hyperliquid, it is there in your wallet, but how is that mapped to actual bitcoins in the real world, right? So do they have a vault? I don't know.
It is ironic that you say real world for Bitcoin. I like it. I like that you have transitioned to a place where now for you Bitcoin is the real world. At least it's real. The hyperliquid vault could be something vague and ephemeral, right? Now I can tell you what happens in hyperliquid. So hyperliquid is like a it's like a system which has like 4 validators or 5 validators, and it runs on what is called the Arbitrum stack. And you need to bridge your assets from Ethereum to Arbitrum, and from Arbitrum you can run on Hyperliquid. Now, the Ethereum to Arbitrum bridge is a very well-known bridge. So if you have a BTC on Arbitrum, that BTC can be withdrawn on Ethereum. Now, what is Bitcoin and Ethereum is an interesting question. So WBTC is a protocol or a system run by used to be run by a company called Bitco. Bitco used to have a real BTC vault where they would custody BTC, and for every BTC they custodied, they would launch one token on the Ethereum blockchain under the WBTC contract. So they had an audit report saying that they have the equivalent WBTC BTC, and one could track both the blockchains. So Bitcoin used to publish the address of their Bitcoin holdings on the Bitcoin blockchain, and we know the Ethereum contract, so we can verify that they're actually matching up. But now WBTC is being held by a company that is made up of Bitcoin and one more consortium, and that consortium has a bit of a shady history. So WBTC is not as kosher as it used to be before.
Right. So yeah, I mean, there are so many fascinating things that need to work in the background, to make this happen. So yeah, I mean, as you exit, we are kind of dipping our toes in here and trying to see how we can profit, from this whole thing. Because
What is the Indian setup like? Can you do it in India?
so we are not serving Indians. So circumventing the whole nonsense here, because not only so the problem here is the regulations or the lack of clarity is just the first hurdle. The second hurdle is income tax guys suspecting that you did something, in crypto, and basically raiding you, quote unquote. And if they find some wallet, they will go and figure out what it is, and then demand taxes based on that. So it's a lot of nonsense going on. So from the get-go, we are completely kind of writing off the Indian market. So this is probably going to take the shape and form of either us licensing some models for people who just want to try out, simple to use stuff, just focus on usability. Yeah, or if we do happen to have a really good model that can scale institutional grade, then we can think about that. But first steps would be to basically launch something that is super easy to use. Just connect your wallet and trade, on Binance or Hyperliquid. Like, so support like one popular sex and one popular dex, and be done with it.
Okay, sounds exciting. So
Yeah. So the difficult part here is basically not used to the 24/7 nonsense of crypto. I kind of like my weekends and, and sleep. So just kind of wrapping my head around the fact that things can go wrong in the middle of the night, and you need to go and fix it. It's kind of hard to come around. So it's an educative journey for me as well.
good luck. I mean, it's kind of interesting. We'll track the progress. We'll see how it goes. I'm curious about the models and how they work. Eventually, let's talk about that maybe in a different episode where we discuss the strategies, how it works, and stuff.
Absolutely. So basically, first things first is keep it simple, make it work. And then we can go from there.
All right. So with that note,
Right.
we can
So
probably end the episode.
yeah, absolutely. So thanks, Tejasvi,
Thanks,
and
Sean.
thank you,
Thanks,
guys.
everybody else.
And do keep us posted on where you go from here, and
Yeah.
we can definitely keep Cryptonite going, because I'm sure it's hard to unplug from this world. So
No, I'll be tracking the industry very closely. So that's going to happen.
awesome.
All
So
right.
we'll catch up again next one. Thank you.
All right.